Alibaba shares are now under $80 per share, which is crazy because there really hasn't been much new news. And so it's very interesting that the shares continue to decline, especially after such a good quarter that we saw last quarter. And so let's dive into this and see exactly what's going on. So when it comes to stock prices, especially in the short term, a lot of you guys already know this. Sometimes it just comes down to supply and demand. Sometimes there's just more sellers than buyers, and this is what I'm talking about. Bloomberg recently put out an article citing that there's a lot of institutional buyers, or I guess sellers in this environment of Chinese securities, and you can see that US and European Union funds sold a net $1.6 billion of China shares this month. I'll pause right there and just say that Tencent, Alibaba are amongst the names that were most sold, according to Morgan Stanley. But that $1.6 billion is just this month. Recall, guys, that in September, the number of outflows was actually more than double that at $3.5 billion. Now, the month is not over, so you could obviously see more outflows. So we'll see how this goes. And, I always say when the institutions are leaving, that's when I get a little bit more excited. Now, I'm not telling you guys to buy it or anything. I had recently brought down my Alibaba positions as a cash secured puts were printing. And so now I have a little bit of room here where I could be interested in buying up a little bit more, especially as the institutions are leaving and they're bringing down the share price. Hey, these guys go back and forth. And especially with a company that's continuing to execute, I'm very satisfied with what Alibaba is doing. I'm a little bit nervous about, the breakup efforts, but it sounds to me like Alibaba has been taking the right steps going forward. And so this will be very exciting to see. Also, the fact that there's been a little bit of a change in leadership causes me to pause just a little bit, but we'll see what the numbers suggest because I will go through the options in this video. But going back to the article, you can see that investor sentiment is likely to stay fragile while foreign fund outflow could persist near term without meaningful macro improvement, government stimulus step up, and or additional sustained market liquidity support. Now, I don't think any of that is really necessary other than the macro stuff, right? If we start hitting a soft landing, if the consumer, if inflation continues to come down while the consumer remains robust, at least in the West, then I think ultimately you get a domino effect and it helps China recover. Now, China isn't doing that bad, and I'm going to show you that in a second. You can see this was in Barron's, and they're saying that China's economic growth was actually better than expected in the third quarter, which is a sign that the government's stimulus efforts are starting to work. In the July to September period, you can see that their economy expanded 4.9%. So for all this, all of these news articles, all of this media, all of these YouTubers, everyone who's saying that China is dying or is going away, well, how do you explain a 4.9% expansion in the quarter? It would seem as though, based on the sentiment that you're hearing everywhere, you'd see a negative or a contraction. I would say I was about to say negative expansion, but just a contraction. But the point here is that there are a lot of things that are not going well with China, and I explain them all the time on this channel. But at the same time, we have to acknowledge that the economy continues to grow at a rate that's faster than the West. And so ultimately, when it comes to China's economic growth prospects for 2023, I personally still think that they can meet their goal of 5% for the year. And if they can meet their goal of 5% for the year, then I do believe that Alibaba can meet their goal of high single digits. That's all I'm forecasting in the model. And that forecast alone is getting me to a valuation of over $200 per share for a stock that's currently trading at $80 per share. Now, once again, this is not investment advice. You guys make your own decisions. This is just how I continue to feel about the company. Now, the question is, could there be some Alibaba specific news which is causing the share price to decline? Well, I thought I might have missed something, but as you can see from here, there actually isn't anything that's been reported since September 26th, and we're now into late October. So you can see that the company themselves have not put out anything. So it's very interesting. Of course, sentiment does carry stocks lower. Now, does this mean that if they have a breakout second quarter of their fiscal year 2024, does this mean that the share price is expected to run? I don't think so. I think there's a lot of pessimism, and it's going to take, I guess it will take a macro reversal. Once again, I think, once you get inflation down in the West, you'll probably see that domino effect in Chinese securities. So it gives us a long time to build up positions if that's what we're looking for. But the question is, Should we be building up positions? I don't know. It's really up to you what your positioning in your portfolio is and what your diversification is. But I always like to look at the options opportunities because I still own my Alibaba shares. I've just been bringing down my cost basis over the years using certain types of options opportunities. And so that's why I like to present the covered call opportunities, usually 1 year or more out, and the cash secured put opportunities. And so before I go into the options opportunities, I just want to make a quick plug, guys. Just note that to access all of my research and all of the models that I cover, including Alibaba, Tencent, etc., every company that I follow, you can access all of that research at that low $5 a month tier. And if you want to join us for a really interesting live presentation every month, you can join us at that higher tier. Now, when it comes to the covered calls, the one that I want to look at is the January 17, 2025's $80 per share. So basically the at the money covered calls. And it looks like you can probably sell these for around $16.25. That's kind of right in the middle of these two bid and asks. And so what I did was I input all of that information into the free downloadable options calculator that you guys have access to, and the link is in the description of this video, and so you can get it and download it. So you can see that I threw in the Alibaba ticker, the exchange, and then the exercise date. There's the strike price, there's the premium, that's at $16.25 I mentioned. Look, we're not getting any dividends from Alibaba, which is fine. I mean, we might as they sell off some of their businesses. We'll see if that happens. And of course, you know, this is a longer than 1 year covered call. And so of course it's 454 days. So obviously over 365 days. Now notice that remember, it's just a binary with covered calls, right? You're either going to get assigned and lose the shares because you purchased them at $80 and you immediately got $16.25 back. So your net purchase price, or sorry, you purchased them at $79.94 and you got immediately got a premium of $16.25. So your net purchase price is $79.94 minus the $16.25, which gives you a net purchase price of $63.69. And of course, you will have a slight capital gain if you are assigned on the covered calls. Remember, there's a binary. One of the binary options that'll happen here is that the share price lands at January 17, 2025 above $80 per share, and thus you lose your shares, but you keep your premium. And so what does that reflect? It reflects a simple 25.6% return or an annualized yield of 20.6%. So this is better than what I got last time. So this is very interesting. Now, the other item that could happen is that you are not assigned on the covered call and you keep your shares. And why would that happen? Because the shares would be trading under $80 as of January 17, 2025. And so your cost basis would just go down to $63.69. Now, I expect the earnings per share run rate at around, or not necessarily the run rate, but in 2015, the earnings per share are expected to be $5.39, which reflects an 8.5% equity yield. Now, 8.5% isn't the best thing in the world. However, 8.5% for a company that's growing I would say considerably fast, not as fast as like, you know, some of these 10xers that you guys are seeing, but, you know, I'm forecasting Alibaba to grow their EPS at around, you know, the high single digits, low double digits into the foreseeable future. And some of you guys may disagree with that, and that's okay. But, you know, I think an 8.5% equity yield with a company that's growing their EPS at the single to low double digits is an acceptable return proposition for me. And so from my perspective, whether I earn that 20% annualized return or I own the shares at $63 per share, I'm happy with both scenarios. So overall, the covered calls get a thumbs up for me, and that's something that I might consider as time goes on. I'm kind of getting a little bit greedier. I would love to see something in the 50s, but, you know, in the 60s is not bad. Now, with the cash secured puts, you can see that I'm looking at the same strike date, which is January 17, 2025. The strike price is $75 per share, so a little bit under the current share price of $79.94. So this would be an out of the money cash secured put. The premium I'm seeing is $9.25. So what you're seeing is an approximate annualized yield of 16.31%. That's really good considering that this is out of the money a little bit, and it gives you a net purchase price of $61.66. Now, I'm assuming that the money market rate will be 5%, 30%. That's the money that I set aside just in case if I do get exercised. Because remember, once again, a cash secured put, and that's what it says up here, is a binary, right? If you are not assigned on the cash secured put, then you do not end up owning the shares. And so, of course, you just earn your annualized return of 16.31%. However, if you are assigned on the cash secured put, then your net purchase price is $61.66. Compare that to the valuation. Obviously, you're buying this at 30% of the intrinsic value, and the EPS run rate is 5.39, so it reflects an 8.7% equity yield. So ultimately, I think both the cash secured put and the covered call are good. In this situation, I'd probably take the covered call, but if you want a lower cost basis, the cash secured put is there for you. The reason why I don't want to go with the cash secured put is because, when you're looking more than a year out, you're assuming a money market rate of 5%, but that could very easily tick down if we go into a deflationary scenario, or if inflation goes really low and then they decide to provide some stimulus to the economy and they bring interest rates down a little bit, you could get impacted by that. And so that's why, in this scenario where the returns are fairly similar, I'd probably go with the covered call. But that's what I'm thinking. That's what I'm seeing right now. I'm not necessarily convinced that I want to jump in just yet, but this might be an opportunity that I end up missing. I want you guys to let me know what you're thinking. I know that there's a lot of people who followed this channel who did end up buying Alibaba at $60 per share when it was down there, or you guys found a way with an options strategy to get your cost basis that low. And so I know a lot of you guys are waiting for it to go even lower if it does, and you're totally fine if it doesn't. So I want to know what you guys are thinking. How are you playing this? And with your response, let me know if you currently own shares or not, and if you're looking to add a potential options opportunity, or you're just looking to add some more shares. And so let me know. I'll respond to everybody in the comments below, and I'll leave it there for you guys. See you later.